Malcolm, thanks a lot for joining us on Exploration Radio.
Yeah, it's a pleasure to be here.
So, one of the things that we often get asked by a lot of our listeners is they want someone to talk about the process of going and starting a junior explorer, mineral exploration company, or even a mining company, really. It's probably one of the questions we get asked most often by people. I guess we really wanted to take the opportunity to talk to you about, you've been involved in the industry for a while, and you have had the chance to run a number of mineral exploration companies as well. So we wanted to talk to you about your journey through this process and, what did you learn? What are some lessons that you would pass on to others? And what did you learn out of some challenging parts as well? Because I think it'll be really interesting to see, what worked, what didn't, the good, the bad, and the ugly of this process.
Yeah, look, I'm happy to share some of that journey for sure, because it's been a fantastic journey. You regularly hear people talking about the roller coaster ride of mineral exploration, and I think that's a wonderful description for it, because there's some wonderful ups and there's some really harrowing downs, I guess. So, it's been really good, and certainly happy to talk through it and see whether, my experience can contribute to others thinking about their experience or what they might do or which direction they might go.
So can we get you to introduce yourself and just tell us a little bit about your background?
Okay, very briefly. Well, I'm fundamentally a geologist. Always wanted to be a geologist from a very, very young age. I decided that I wanted to become a geologist, and I was influenced by things like a trip to Broken Hill when I was very young with my family, and getting totally engrossed in the rocks. We had an underground visit and all these sorts of exciting things. And then also influenced by my grandfather, who was a bushie. He was a sawyer, and so he used to take me out into the bush a lot. And from there grew a love for the bush and a love for mineral exploration. Studied at University of Queensland, and then I did more study at the University of Western Ontario in Canada. Worked for Western Mining for 23 years. The longest I was in any role at Western Mining was about 4 years, so I had a lot of change, a lot of variety, was exposed to a lot of commodities, different people, so the learning experiences there were rich. And then I joined the junior sector in 2005, and from there I've been involved in basically 4 juniors. And 2005 to the present day, we've seen some pretty severe cycles in the resources sector. So it's been an interesting ride.
Hi, my name is Ahmad.
Hi, my name's Steve, and this is Exploration Radio, a podcast focused on the past, present, and future of exploration.
You and I have known each other for a while, and I met you very early in my career. And one of the pieces of advice which I really liked that you gave me was that you should always work in big companies because they tend to be a great training ground for geologists. So can we talk a little bit about your career in WMC? Did you find that it was a good training ground as a geologist?
Absolutely. I look back on my time at WMC with very fond memories. I joined them after graduating from university, and I was lucky. We were in an upcycle at that point, and there were jobs around for geologists, and I was offered a number of roles with other companies, big and small. But at that time, all the advice I got from others was, if you get offered a job with Western Mining, take it. And I followed that advice. My first job was at a mine. It was in Three Springs talc mine, open pit talc mine.
Wow, that's really starting pretty hard, talc mining.
Well, I got there, and there were about 3 years of drill core, and the mine manager said, log it and tell me what it means. So it was an interesting introduction. And from after that, I worked in the Great Sandy Desert at Nifty in the very early days of exploration. We were drilling out the Nifty copper deposit. And, that was totally different to what I'd done for my first few years. So the learning experiences were wonderful. You were surrounded by very, very smart people, and you couldn't help but learn. You were thrown into very uncomfortable positions. We had these things called project reviews at Western Mining, where you basically had to get up there and justify your project. And most of us, particularly when we were younger, were petrified of doing these things because, there were lots of very experienced, very smart geologists at the table. So you learned a lot, and, I think it sort of made you tougher, but also I think realising your decisions had big impacts on budgets and exploration success and all those things. And then later periods in Western Mining, I guess a big change for me was when I went to the Philippines, and I guess then I moved into a bit more of a management role. Mm-hmm. And again, you're surrounded by really smart people that guide you, but also expect you to make decisions. And that was a really tough learning experience at the time, but I look back on it with really sort of positive thoughts because I learned a lot. You were thrown in the deep end. Someone said to me, I went to the Philippines with black hair and I left to the Philippines with grey hair. And I think that's a good thing to remind yourself of. So, yeah, big companies, great experience. You learn a lot. They don't always do it right, but I think you learn from making mistakes as much as you do from having success. But you're surrounded by these incredibly smart people, and you can't help but learn.
So do you think that big companies then are a good opportunity to learn that management side because you get exposed to so many different things?
Yeah, definitely. And, you're managing in a big company almost from the day you join. You're just managing at different levels and managing at different levels of complexity. As a geologist, I guess one of your first jobs often is to manage a group of drillers, and you learn a lot from doing that. And then, as some of us did, you move into a sort of head office type environment, and you find you're managing people that are in no way associated with exploration, but you're managing that relationship. So you learn a lot about management, and you learn a lot about what works, what doesn't work, and if you use that experience properly, then it's easily translatable into other environments.
That's a really good point, that the fact that, in a big company, you see a lot of the other cogs of the company as well, or the industry. And I think getting that exposure is really, really worthwhile, not just from finding out what's important and what's not, but also the fact that you have the ability to network with a wide group of people as well, which can be quite beneficial later on in your career as well.
Oh, look, absolutely. Networks in this industry are critically important. I certainly manage my network very actively, and a lot of that network was built up by your time in Western Mining. I think a lot of people in the industry, particularly in Australia, but also in North America, they talk about the network of ex-WMC people that are out there that are either running juniors or involved in majors in senior roles. And it's an incredible network, and it's broader than geologists. It's lawyers, and it's mining engineers, and it's others as well. So that network is very important. That network is very important for the whole industry to operate on, because a lot of the industry operates on relationships rather than necessarily contracts or whatever else might be sitting in the background. So yeah, very, very important network. The other thing is you do learn from all sorts of different professionals, lawyers, mining engineers, other people involved in the industry challenge you just as much as geologists. Now, I guess in the early stages of your career, when you're by osmosis learning a lot from other geologists, then they're the most important people in the room, but that broadens as your career evolves.
Yeah, that's right. I mean, it's funny you mentioned the WMC network. I think there's an official name for it, isn't there? The WMC Mafia? Or or am I the only one that...
That's what we call it, for sure. So it has negative connotations, and it shouldn't.
Yeah, I'm sure the Mafia does some pretty good things every once in a while as well. So why did you leave WMC?
I left WMC at the time that BHP acquired WMC. I was offered a good role in BHP, but I did feel, well, it was for two reasons that I didn't continue there. I did feel like I needed a dramatic change. I did feel like I needed to challenge myself. And I didn't think challenging myself in BHP was quite the right fit. Also geographic. I mean, I was in Melbourne. My kids were at school. The role with BHP would have meant a relocation. I'd relocated every 3 or 4 years of my life prior to that. You know, at some point, it's time to modify your priorities. But there was this underlying sense of excitement about joining the junior sector and really challenging yourself and seeing whether you can be successful and do things in a way that maybe you can't do in a big company, I guess.
Yeah, because right about the time that you left WMC is when you and I first met. And I remember something that we were talking about at that time where you made a comment that, going into BHP, you might have, you were doing something that you already know how to do, but just doing it slightly different and slightly better in that sense. But you wanted to do something different. My theory is that there comes a point where a lot of managers, exploration managers in large companies, where if they stay in big companies, they're essentially just going to get better at what they're doing. Whereas when they jump to a junior market, they get to do something quite different. And they somewhat prolong their career because of the learning aspect of it. Do you think I'm right in that hypothesis or that theory?
I'm not sure. I think with hindsight, my comments to you maybe weren't quite right. I think, I think you just learn different things, and there's different areas of growth, and there's different opportunities and challenges in big companies versus small companies. I think early in your career, it's very good to be in large companies. Picking the right time to move out and join the junior sector is often difficult. Probably don't get it exactly right, but you give it a go. What I think would be really interesting to see is how some of us in the junior sector would go if they returned to large companies. I think that'd be a really interesting experience.
That's a good point.
I think it'd be good to see. And there's a few examples out there, people I know that are doing that. So let's see how it goes. I think with the right person, it would bring a lot of benefits to the large company. And for the right person, they would be very challenged in making sure that their new role in a large company delivers appropriate results.
So let's follow that thread a bit. What do you think you have learned outside of big company environment that you could now take back into a big company environment?
Yeah, that's a good way to look at it. I do think that to a certain extent in small companies you've got to identify how to cut through some of the unimportant stuff, right? And you've got to get on with it because time is not your friend. You really do have to move quickly. And we see that small companies move more quickly than large companies. So if you could in some way take that nimble approach and find a way for that to work in a large company, I think that would be positive. And maybe you see it in some of these more entrepreneurial large companies. So I guess I do have to qualify my statements by when you look at the industry, there are some large companies that do appear to be very nimble, and we can't group them all together, So maybe it's those companies that are ultimately going to be the most successful. I mean, how do you define a big company? You look at a company such as Northern Star, which has a huge market capitalisation, very big, but gee, they work like a junior, right? So I guess what that says to me is that it is possible to take some of the learnings and the positives from a junior and take them back into a big company, so long as that big company wants to remain at the forefront, wants to change, wants to do things better, is continually improving.
So is that one of the things that you found challenging when you moved into a junior environment, the pace of the things that happen or the pace that you have to work at?
Oh, no, I think, no, we're working at a pretty rapid pace at WMC. Our backs were to the wall for a while there. No, but it's the pressure for sure. I mean, it's all linked back to, I think, your ability to do things and your ability to raise money and your day-to-day interaction with what the market values you at and what your shareholders think. In WMC, you're not going to get calls every day from shareholders saying what's going on and what's happening next. And you're also, you're in a level of comfort where if you continue to do a good job, funds flow your direction, whereas it's a lot more difficult in a junior. So I find the volatility and intensity and pressure is probably more in a junior because you're being judged in real time. You know exactly what the market thinks of the value of your company, and you invariably don't agree. And you're face to face with shareholders. And during the good times, that's wonderful, a lot of fun. And during the bad times, it's horrible, and you'd rather do something else. So it's not about pace as much as, I don't know, your pressures are closer, I guess. They're right there.
I guess I had this conversation with like a colleague of mine, and they've made the jump between like junior and the major company, and they likened it to, like in a major company, you make a movie, you have a lot of money, you make stuff, and then you do the test audiences later to find out whether it's good or not, and then adjust as you go along. Whereas in a junior company, it's more like stand-up comedy. You know pretty much where you sit with the audience at every minute of your set.
Yeah, that's a good analogy. I like that. That's right. Yeah, I think that's quite true. It's real seat of the pants kind of stuff. But for those of us that are, adventurous adventurists and optimists and explorers and passionate, then that's kind of okay.
That's a fuel for those type of people. So, you get immediate feedback, so you know where you're going and what are you doing. So let's go back to the time where you're about to leave WMC. Were you looking for the challenge to go to a junior, or is it just that the opportunity came up and you went along with it?
I had made a decision that a junior was a likely path for me when WMC was being acquired by BHP. I guess I kept an open mind. A junior sort of made sense. And for me, the move across to Indophil was a very easy one because it was ex-Western Mining people. I knew them very well. They were friends as much as business colleagues. They talked to me about the role, so it was a very easy shift in terms of I knew where I knew the people I was going to join. It wasn't as if like a first day at school, everything's brand new, right? It was there was a little bit of familiarity there, so it was an easy shift.
So that's a good point, actually. It's about as easy a transition as you could really had.
I think so, yeah. I mean, the projects were some ex-WMC projects, and so it was easy. The next move I made, though, from Indophil into what was then Emperor but became Intrepid was different. I didn't know anyone. It was a very new environment. Their office was in Brisbane, so I was doing some commuting. And their projects were projects that I'd not had much association with. I'd had an association with one of their projects, Vaticola in Fiji, because it was an ex-WMC project, and I'd visited there once in the mid-'80s or something. I knew where it was. That's about it. So, but that was a much more challenging change. And that, with hindsight, that was really good. I mean, I was really, I was put on the spot there. And I think, when you're under pressure and put on the spot, you have to perform. So it was a good environment, having a lot of pressure to deliver. And I think, most people, when they're under a lot of pressure, they do deliver.
I want to talk a little bit about how you pick the companies that you join. What do you base that decision on? Is it the people in the company? Is it the assets that they have or the projects that they have? How do you go about choosing the 700 odd juniors that are out there?
It's a combination of those things. If I look back at my move across to Emperor or Intrepid, it was two things. It was the people. So, I did do a reasonable amount of research on the people, and it was the discussion I'd had with the CEO about what the challenges were. So, some people like a challenge and some not as much, but the challenge of joining a junior that had a lot of issues that needed fixing was actually quite attractive, particularly when you're joining a group of good people. So you feel, as a team, you can fix things up, make a difference and get it going. So in the case of Intrepid, it was the people and it was the the big picture challenge.
So would I be right in saying that you did feel in some way that you had some weaknesses when you went to Emperor, and those are the things that you wanted to build up on? Yeah, I mean, you're obviously saying you felt challenged by the role. Clearly, you picked those roles because of the challenges that they gave you.
Yeah, well, I think, I don't know. I think that's kind of normal. I mean, people look for professional challenges, and that's what keeps them motivated and satisfied. And so I think that's quite normal. And certainly in the junior exploration space, it's all about challenges and wanting to dive in and chase some of those and solve them. So I think that's quite normal and widespread, which is probably why the industry is such a great industry and delivers incredible results and is very buoyant, particularly when commodity prices are high, and not so buoyant when commodity prices are low. But so the idea of challenge, I think, is throughout the industry. But that's definitely a key component, I think, for anyone that moves from one environment to another. You look at those challenges. Part of it is you wanting to learn from those challenges, but part of it, I think, is you wanting to test yourself and see whether all that you've learned in the preceding period can be applied to solving those challenges. I think it'd be a very different thing if you're on your own. I mean, maybe, I don't know, if you compare it to a solo sail around the world, I'd be not up for that, right? But when you're there supported by a good team of people, it's got this level of excitement that I find, phenomenal and motivating. The right sort of projects, I think, get attracted somehow to that environment. But it's all about, the people and the challenge that's there and a feeling that you can do it.
I think it's really interesting. I mean, like talking to a few people, like in the investment side, you can tell that there is this like polarity between, like people judge companies based on the assets that they have, not necessarily the team that they have. And that's mostly in mineral exploration. Yet when you look at venture capital, and if you ever go pitch anything to venture capital, the first thing they ask you is how good is a team and how well do they work. So to them, like, backing the right team is more important because they know they'll make something out of even an average idea because the team's really good.
Yep. I'm noticing more and more that people are wanting to hear about the team and the people and who's behind it. So that's definitely something that is being talked about a lot. Maybe that's a consequence of us coming out of a bear market where, people probably have lost a lot of money through some of their investment. Maybe they thought the project was good, but the people that were managing it maybe didn't deliver or whatever. I don't know. But there's more and more discussion about the quality of the people. And I think it's that, that investors are maybe taking a much broader view of how they assess an investment. They don't only bring out the spreadsheet and look at a discounted cash flow. They look at whether people can deliver and whether they've delivered before. And a lot of the backing goes towards the people for sure.
So you've noticed a change in the last, let's call it 5 years or something like that there's now a change in the way that investors are looking at companies?
I'm sure it's always been there, but I have noticed a change. Yeah, I think certainly with the people that I speak to, they place a lot of importance on it and they really want to understand what you've done before. And I also find they go away and do their homework and check on what you tell them. I've had some meetings where I've been presented with a questionnaire before I actually have the meeting. And so it depends on how I answer the questionnaire as to whether they'll take the meeting.
Far out. Jeez.
Yeah. But, they say things like, well, it's a good filter because if I don't get the questionnaire back, I know I wouldn't have wanted to have met them anyway. So there's all these sorts of things going on. This is from the investment side, all these sorts of things going on where they're trying to filter what investments they want to take a close look at. And maybe it's because there are so many. I mean, these guys do get lots and lots of people coming through the door, so they've got to filter it somehow. But, yep, people are very important and they do their background checking.
So let's follow that thread again. So now we're talking about investors. Investment in a junior explorer is a huge part of what you have to do. So how do you go about dealing with investors? First of all, do you like that process?
During a bull market, it's a lot of fun and it's good. And during a bear market, it's terrible. So, it really does depend on market sentiment, and it can be very, very difficult when the market is down. It is easier when the market's up. It certainly is something that is part of the business, and sometimes you enjoy it more than others, but it's definitely part of the business. And it's really good when you have an interaction with an investor that's very positive. I mean, it's a very motivational part of the job.
So am I correct in assuming that a lot of the dealing with investors was something new that you had to learn when you went into junior companies? Like, did you have much background in this space at all?
No, I think when I was at Western Mining, I did one analyst's tour with a couple of the senior guys at Western Mining when I was involved in nickel exploration there. So that was my first exposure to dealing with a bunch of analysts. That was after being in the industry for 20 years. But then I learned a lot in my role at Interfill because I worked closely with the managing director there. He took me on a number of road shows. He was very good at doing that. He did it well. So my learning curve there was very, very steep. And so for 12 months, I absorbed a huge amount. And it was that really, I think, gave me the foundation to feel comfortable going out and doing it myself. It would have been very difficult if I'd gone from Western Mining straight into a role where I had to do that myself. And that would have not been the right thing to do. To pair myself with someone that was good at it and that did it and that took me on those roadshows was exactly the right thing to do.
I guess, in big companies, you deal with a different part of the investor pyramid as well. You're dealing with a little bit more institutional investors, or so the analysts are different. Whereas in the junior market, you run the gamut of dealing with people from brokers to investment houses to private equity firms, even down to high net individuals that want to deal with you directly. The perception that I wanted, and you've done a really good job talking about it, is that the investment crowd that goes into mineral exploration is not a homogenous entity. It's made up of a lot of different people, which sometimes have different requirements as well.
Yeah, definitely. And, my view is you speak to everyone, you take every meeting, you deal with everyone with the same level of respect. You find a way to find out what they want to know because it's different for different groups. And, it's everything from someone that invests a couple of $100 in stock in your company and is starting to invest in the resource sector through to, as you say, big heavy-hitting institutional funds. And so in your sector, you've got to be across them all. And really, I think you take every meeting, you deal with them with a lot of respect, and you talk to them all the time, as often as possible. And I think that, that does a couple of things. It tells them a lot about how you run a business, and it tells them a lot about the industry, because you want them to know a lot about the industry. It's not just knowing about your company. You want them to understand the industry.
Do you think the average investor out there has a good understanding of mineral exploration as an industry?
There's no such thing as the average guy, I guess. Look, a lot of the people we speak to probably have a good understanding of the market generally, but not necessarily a good understanding of the technical aspects of exploration. It's a difficult one. I think if they're at the point where they're becoming shareholders, I think they generally do understand the market. Some of them have different expectations. Some of them might be looking for a small return. Others might be looking for 10 or 20-fold return. There's a full range of levels of understanding of mineral exploration, and that's why you've just got to speak to them as much as possible. But you do establish what level of understanding they have, and then you pitch your interaction with them at that level, and it's, you're always coming across people that know more about the area you're exploring than you do sometimes as well. It's surprising.
Do you think managing expectations is a large part of your interaction with investors then as well? You obviously don't want to sell them a story that's not going to be conceivable because they might not invest in something that you're going to do in the future.
Yeah, managing expectations is very important. And I find that something that I have to keep reminding myself of because, I'm a pretty optimistic person and pretty passionate about exploration. And sometimes I get ahead of myself really in talking about what I think is out there or what I hope is out there. But you've got to find that fine line, right, with expectations where you get people excited like you are, but you have to qualify it. Yes, managing expectations is very difficult. I've made lots of mistakes along the way in creating expectations that haven't necessarily delivered on. So you just kind of hope you don't make the same mistake twice.
So do you think there's an appetite in like the established investment routes? So like I'm talking institutional and things like that in backing exploration? And if there isn't, why do you think that's the case?
So institutional, I guess that's a big range. And again, you've got to understand the market and you've got to match your business for what's happening in the market at the time. I don't think you can hope to beat the market. You've got to work with the market. During times like we're in at the moment, then yes, there's a lot of interest from formal funds to look at a component of their investment portfolio to be in smaller companies that are higher risk but potentially higher reward. That much harder when the market is not as healthy as it is at the moment. And we went through that. I mean, with Sunstone, we went through that period. We had a really good copper project in Sweden, and we thought it was exactly right for the times 2 or 3 years ago. And that copper was over $3 a pound, and we thought, right, this is a project that we can get in and develop. But what we didn't see coming was copper going to $1.90 a pound, and our company being a single asset, small pre-development copper company. And we kept drilling and we delivered some exceptional results into the market, very good results, but we didn't get any market traction. And with hindsight now, we possibly would have done it a bit differently. And that's a good example of us not working with the market. We were trying to go against the market, and that's very, very difficult. So yeah, to come back to your question, in the current market, there is a lot more interest out of bigger investment groups in having part of their investment exposed to junior explorers. And I think, the more they see of the success that's delivered, I mean, the more they see of things like the Nova discovery and the performance of Sirius during that process, then the more they see of those sorts of examples, the more willing they are to have a component of their investment dollars exposed to that. And, I think, interestingly, a number of them are enhancing their ability to assess these opportunities. There's analysts being employed in these groups now, whereas 2 or 3 years ago, they were letting go mining analysts. So it's cyclical. So, they're now coming back into the industry. So I think during the good times, you see more interest, and I guess that kind of makes sense.
So I guess I want to go back to a point you made. So as the market changes, do you, as a managing director of a company, have to change your pitch to the investors as you go along? Like, do you have to continuously read the tea leaves, so to speak, to figure out what's going on?
I think, yes, you do. It's all about strategy in a junior. Strategy in a large company is quite a formal process, and there's lots of process built around it, whereas strategy in a junior is more strategy on the run. So you do need to adjust your strategy depending upon what's happening in the market, absolutely. And I think you see a lot of juniors out there that do adjust it. Some adjust it too far one way, and if others don't adjust it, they potentially have trouble surviving. So yeah, you do. So you do have to understand the market, and you do have to adjust what you're doing to match that, because look, if you're successful in a discovery, that discovery will have a different value depending upon what phase in the market you're in. So if you're in a very buoyant phase and you make a discovery, then it has a higher value than if you weren't in a buoyant phase. So if you can align all of those different aspects, you will provide a greater return to your shareholders than if they're not aligned. Even though you can't influence the market, you can work with it.
So in saying that, do you think success solves a lot of the investor loyalty problems? Like, is it easier for investors to join in when you've been successful previously?
Yes, definitely. I think, certainly I think any of us would more comfortably back someone that's had success in the past than maybe someone that hasn't. I shouldn't say someone. That's the wrong thing to say. A group, because it's never someone. It's a group. So you're more likely to back someone that's delivered that success in the past. But the pressure's always on, right? If you're part of a group that has delivered a great success, people tend to forget that fairly quickly if you're not delivering success in your new venture.
That's right. You're only as good as your last project, essentially. So, yeah, that always rides on you as well. So our industry is notorious in the fact that it has these investment lulls. I think you've now been through a few of them. So how do you survive them? Do you have any strategies? Do you find it tough? Do you get better at handling the disappointment that comes through these investment lulls?
I guess you're not as surprised because you sort of know that, they happen. Well, in our business, whether you're in a big company or a small company, you cut costs. Pretty simple. I remember very early on in my career, actually, with a director of Western Mining at some function commenting on the weak price of nickel and saying, "Oh, well, the checkbook is now closed." So it's kind of similar with us. You cut costs so that you can survive through the difficult periods, because you do actually know that it's not going to last forever. Hopefully you'll outlast any trough. And we've had to do that. Companies I've worked at, we've cut salaries. We've had to let people go, which is never something you want to do. We've had to, let projects go. You just got to do it. And it's survival, and just one of those things. So again, that's where you've got to understand the market and read the market, and no point in going against it, because you can't raise money, and we rely on shareholder funds. So when you can't raise money, you got to stop spending it.
So let's talk about the opposite side. Do you think major companies could do more to support junior companies?
I mean, my mind immediately goes to joint ventures and things like that. And joint ventures are really difficult things, I find. If you can have a choice between having a joint venture or holding it yourself, you hold it yourself.
How so? What do you find challenging about the joint venture part?
Well, some joint ventures, and I find that those that are built on generally a long relationship, or those that are built on a genuine relationship where both parties are really committed to making it work, and both parties understand what the other wants out of it, and they're aligned, then they work well. And there are some examples of those for sure. But sometimes often joint ventures just end up in a shit fight, and it's because your expectations or what you want out of it deviate from one another. And that's not a fun time, because you don't want to be managing a joint venture by referring back to the contract, in my view. You want to manage a joint venture through a relationship. I think early on, if you can establish very clearly what the expectations are and what you each want to get out of it, then it can work. And, I think there are if I look around at some larger companies that are well-funded, I sort of have a list in my own mind of who I'd happily work with, and maybe a list of those that I'd be a bit more careful with, I suppose, and it's all about this sort of respect in a joint venture. It's more than just the contract that's written on. I mean, I don't think a joint venture contract ever addresses all the issues. I think there are some companies out there that you'd rather work with, and maybe the big companies are wanting to put themselves in that position as much as anyone else, right? Because if they put themselves in that position, there's more opportunities for them. And if junior companies, have good projects and have had a good track record with joint ventures, then they're more likely to get partners as well. So that's the way it works.
Do you think that dynamic changes if you do a joint venture with another junior company?
Yeah, I think they are, because usually the expectations and the end goal are more similar, if that's the right way to put it. I've had good experience of working with other juniors under joint ventures, generally speaking. But again, it goes back to the relationship and making sure that while you may want involvement in the technical aspects of a project, there's more to it than that. And you've got to satisfy yourself that the other aspects, the relationship aspects and the legal aspects and all of those other things that make up a joint venture are something you're comfortable with.
So one last little thread that I want to talk about is, in the past couple of companies that you've worked with roughly the same group of people. Is that by choice?
Most definitely. At Sunstone, absolutely, very proactively managed to get that group of people together. And so, it's a diverse group of people and complementary. And I actually think it's a really good story because, I mean, as you know, I've worked with Bruce Rawlack for decades, and he's arguably the best copper gold geologist in the world, in my opinion, and a great explorationist. And so, you know, I would work with Bruce any day of the week, and hopefully I will for a long time. And then at other companies, I've met other people. And so the group at Sunstone includes some of those other people. And they're not geologists. One's a mining engineer who I worked with closely at Intrepid. And then the other, our CFO, worked with that mining engineer. So it's this classic example of people attracting one another, and they fit together. And there's wonderful respect. And because you sort of understand one another, the ability to have constructive discussions and challenge one another, I think, is easier. And, you know, a few other things. I mean, in the Sunstone office here in Brisbane, it's open plan. And so we started off, when we moved into this office, we said, okay, you know, we better have a weekly meeting so that we get together and just make sure we're all on the same page. Well, we've never had one because it's an open plan office. So we have a weekly meeting every hour, if you like, you know, where we just talk to one another, and it evolves into a great discussion, and we know intimately what one another is doing. So you work with people that you have a lot of respect for and that you know how they work. And I think you try to do that very much as a team. It's not just one-on-one. It's that team is complementary. The skills are complementary. Not everyone takes the same view, and they can share a different view, and the others respect it. So, yeah, very proactive, and that's what we wanted to put together here at Sunstone, and seems to work well so far.
So the converse of that is, what happens when you get the wrong people inside companies? Do they have the capacity to torpedo essentially what you do as a company?
Yeah, look, working with the wrong people is not a happy place to be. And so, like all things in business, it's something you've got to deal with. How you deal with it can vary on the circumstances. When you're a junior, you've got a lot of people that you're responsible to, shareholders, others in the exploration team, boards of directors, stakeholders, all of those. And so you've got to, if there's a problem with the people you're working with inside of the company, you've got to find a solution that doesn't compromise your relationship with all those other affected parties so much. So it's really important to try to get it right in the first place. And if you don't get it right, you've got to solve it. Invariably, you go different directions.
So in junior companies, you often have small teams. How do you solve the problem of, you know, being limited by what you can do or what you know? Like, do you use a network of people around you? How do you get around that problem?
Yeah, and it is a problem. And I do quite often actually think about how differently I would operate if I was working in an environment that was comparable to, for example, what we had at WMC. Because, you know, there I was just day to day surrounded by these incredibly high intellect individuals that were continually educating me, if you like, challenging and you know, coming up with all these wonderful ideas and concepts, and not just geologists, but others, you know, lawyers, mining engineers, others. So it is a problem in juniors that you don't have that really healthy environment. And I guess it comes back to our networks, where we try to manage our networks as strongly as we can, so that you do find that you interact with those people periodically, and they're very good reality checks. You know, you listen to them, they make you go away and think about what you might be doing right or wrong.
So is that something you consciously do?
Yeah, definitely. definitely. Interacting with some of those people is very, very important to you being able to make good decisions when you're under pressure to make good decisions. So you draw on all of that when sometimes you're sort of somewhat on your own making a decision.
So we're pretty close to the end of our interview, so we'll do some rapid fire questions. What lessons would you give someone that's about to start on their journey being part of a junior explorer? What are some key things that you would tell them about based on your experience?
Yeah, certainly, find someone to essentially be your mentor and rely heavily on them and just continually ask them questions or check your opinions. I think that's important. The other thing is, as I said, take every meeting, respond to every inquiry from a shareholder or a prospective shareholder. Just work really hard on that network because it pays dividends later on. It's very, very important. And watch the market. Improve your potential to understand the market.
Yeah, cool. I think that's pretty good. So this is a question we ask all our guests. What is something that you think needs to die in exploration? It could be a concept, an idea, could be a physical thing. What is something that you think we should jettison out of mineral exploration?
I guess one thing that I would like us to not do is just have a group of geologists around the table when we're making decisions on exploration. Broaden it wherever possible. And I say that based on my experience of working particularly with mining engineers who look at an ore body in a different way to what an exploration geologist might look at it. So what's to jettison? Don't limit yourself to a group of geologists when you're in exploration environment.
I think that's great. That's a really good one. Conversely, what's something that you think we should keep in exploration at all costs? What's something that we have to maintain as part of our industry?
Yeah, something I do find myself referring back to and talking to others about is this whole business about, have confidence. And it's something that Roy Woodall instilled in us at Western Mining. And, you build a team and you have confidence in them and you maintain that level of confidence and motivation. And it, in most cases, will deliver success. To qualify that, you cannot let yourself get in a position where you believe your own rhetoric. If you're promoting something, and this happens a lot in juniors, if you're promoting something and you start to believe your own rhetoric, you don't look critically enough at the information that you're analysing. So, and I've been in situations where we've been in a team where they've, the leaders particularly have believed their own rhetoric and it doesn't work. So have confidence, motivate one another. It's a lesson that Roy Woodall instilled in us, and it applies equally today as it did 40 years ago.
I think that's a really good lesson, and it's probably a pretty good point to end on. Thanks a lot for joining us, Malcolm.
Thanks very much. Pleasure. Really good talking.
Exploration Radio is brought to you by Steve and Ahmad. Our producer and all-round go-to guy is Dan Hershowitz. This podcast is recorded at the Perth Music House. If you'd like to know more about Exploration Radio, check us out on explorationradio.com. Or you can also find us on Twitter, Facebook, or LinkedIn. And as always, if you like this podcast, please review us on iTunes, Stitcher Radio, or wherever you get your podcasts from. Until next time, let's keep exploring.